Good morning. I'm doing this on the morning of May 22nd, 2023. This is going to be the second week of my putting out a video and then following up with a webinar at 2 p.m. on Thursdays. The name of this webinar series, of course, is Unleashing the Power of ACS Investor Software. And each week I'm going to do something different to help you understand the power of this software. And this week I'm going to take a look at some of the factors which determine which stocks are the best stocks in the database. Now each week I make some modifications, and just to make sure that you have the same webinar files that I do, I want you to do two simple steps. If you're subscribing to get the files, I want you to open the warehouse. I want you to click up on this Choose Create Warehouse View icon. I'm using the small icon, so your page may look different than mine. And just go to Ron Brown Top-Down Process Scans 2023 Webinar Series and delete that. And then bring up Charts. Any chart, go to the Choose Create View, click on that, and it'll say Top-Down Analysis Charts 2023 Webinar Series. Delete that. And then I want you to go to Preferences, and I'll send out the link for you to download the add-on if you don't have that link. I'm going to select Install Add-on, and it's going to be called, or it is called, Webinar 2023 Files. After you download it, and just open that and install it. And it'll just take a few minutes to do it, and then you'll have my latest files. What I do is I rearrange and add and delete, and I'm just trying to get the most efficient set of files. So if you'll do this every week during the webinar series, you'll have exactly what I have when I'm doing these videos. Okay, the import is complete. So this week I had some thoughts over the weekend, and I thought I should try to take a look and see what the driving factors are for a stock. And not surprisingly, I came up with what I thought may be the case, but there's some other interesting things here. One thing I did is I had this in here last week, the NASDAQ 100 and SP 100, or the OEX. Up and down, I have combined these groups because these are some of the most traded stocks in the database. I've added this number 3 down here. It combines the NDX and OEX. I'm going to make a group of these two. You can see there are 171 securities in here. These are all the big names. I'm going to hit my alternate G key, and I'll just call this NDX OEX. There's a lot of overlap between these two indexes, but there are some in the S&P 100 that are not in the NDX, as you can see. I'll go ahead and generate an index. I really don't need to. But now, what I want you to do, if you have the new installation, is number 5 here, and this may go somewhere else eventually. I really didn't know where to put it. Percentage return factors, end of day only, common stocks. What I am looking for here, and this is sorted on the raw combo, and the raw combo is percentage change beginning of the year. And you can see that there's some big names here, or big stocks here, and I wanted to see what the factors were that were driving these stocks to the top of the list. This is as of Friday. And you can see NVIDIA's on the top, which is not surprising, followed by Meta, then AMD, then GE, Salesforce, and so on down the list. But I'm just going to go across here and point out the different fields. Now I'm using this new drawing tool. I'm getting more familiar with it, but here's the symbol, of course. And then I'm sorted on raw combo. You can see the numbers get to progressively smaller. Here's the last date, which was Friday, the last close. Percent since the beginning of the year. NASDAQ is up 113.9% as of Friday. And you can see the changes over 1, 5, 15, and 21 days in the industry. Now, the industry since the beginning of the year is up 38.0%. So obviously the industry is a big component of what drives a stock up. This is something we've known for a long time, and a lot of people just look at stocks and don't consider the industry, but over the years we've been teaching that that is one of the main factors. Now these are industry prices over the last 1, 5, 15, and 21 days. So you can see over 21 days the group was up 6.67%. And this is a comparison to the S&P 500 over 5 days and 10 days, outperformed by 8% over 5 days and over 10 days by 7%. Accumulation. Now this is interesting, and I have pointed this out before, but not very often. The EPS rank really has little to do with how a stock is performing. So when we run screens based upon ERG, and that ERG is over here, I slip the Kirkpatrick relative strength rank in here with the regular relative strength, and you can see the ERG is only 185. So if you're looking for high ERG stocks, 240 or above, you're going to miss out on most of these big winners. Here's a 243 clear down here, and let's see, it's CrowdStrike, but you can see that there are very few 240s in here. Let me just sort on this if I can. I had to turn the drawing tool off before I could sort that. Anyway, you can see that out of these 170 stocks, only 12 of them have an ERG of 240 or better. So if you're using really strict criteria like that, it isn't necessarily a good thing. Now going back, clear back over here, let's look at the percentage price change from the beginning of the year, and you can see these are all in the green, but some of them did not perform all that well. Now I'm going to sort on the relative strength rank and go back up to the top, and these are all 95. Let's see how the 95s did, and you can see the percentage price change. Well, it's good. NVIDIA 113.9, but what I'm looking for are the combination of factors which are driving these stocks to the top. So let's go back to the sort on the raw combo and go back over here and just go down a few of these. NVIDIA EPS rank 13, Meta 9, AMD 21, GE 73, and what's 93 here? It's MELI. So EPS rank, if you're filtering on EPS rank, I would not do that. I just don't think it's going to help you find great stocks. Now looking at the EPS ranks, you can see that the stocks on top, 95 for HCSI relative strength, which is based 40% on the last quarter, and the other quarters, prior 3 quarters are 20, 20, 20, and the Kirkpatrick relative strength, which I like to use also, is it's a relationship of last week's closing price to a 26-week moving average of those prices. So we get two different ranking systems, and the Kirkpatrick rank really gives us a different perspective. Here's the group rank. Group ranks are important, but not necessarily. The industry percentage price change is much more important than the group rank. Now, the group rank is based upon something very similar to the Ian Slow rank if you use the ranking module, but it's really based upon, I think 70% of the ranking is based upon the last 6 months, and the 30% is the prior 6 months. So industry percentage price change seems to be more important. Now you can see the percentage off the 52-week high, 52-week low. This is how much these stocks have gained since the 52-week low. These trends are important. Long-term, intermediate term, medium term, and short-term trend, and then the fan. If a fan is in place, you can see that the fan is in place on all of these stocks. They're at the top of the list. Not this one, not Tesla. Let's bring up Tesla though and take a look at it. Make it full screen. Get rid of this. Go down to my black charts, chart number 2. And you can see that, remember, this is from the beginning of the year. You can see that it's under the fan, but coming back up. Now it's got a low pivot here, and a higher pivot, and a higher pivot here. So it is trending up. Now I've got this running in the background today on with Thinkorswim, and this is what it currently looks like today. Now let's compare this to the fan on NVIDIA. Notice how these are all sorted for the chart the same way they are in the warehouse. I'll compare this to NVIDIA's fan, and even though Tesla is near the top of the list and has had a good return for the year, it is not nearly as strong as Tesla or Meta, which hit a new high today. I didn't get Meta, did I? Oh, there it is. It's just a little slow coming up because I'm recording. Anyway, it hit a new high today, so another nice fan. Now, the fan really didn't go into effect. This was in a long-term downtrend. But you can see here's a low, higher pivot, slightly higher pivot, moving up earnings, and then it backed off, of course, and then started forming a series of higher pivots again up to this point. A little bit lower. This must have been pre-earnings. It was. And then you can see what happened after earnings. Anyway, getting back to this. Let's look at the industry percentage price list. And you can see that the industry that Meta's in is been moving up over the last 21 days, up 15%. But the group rank is only 59, and the ERG is 163. These trends are all up. Percent institutionally held, I put that column in. I think that's probably significant on these larger cap stocks. And these are analyst ratings, buy-sell ratings from Zacks. If it's green, those are positive buy-side ratings. I'm just going to bring the help file up on this. And on these analyst buy-sell recommendations. If it's 1, it's a strong buy, 2 is a buy, 3 is a hold, 4 is a sell, and 5 is a strong sell. I usually don't pay much attention to these, but this information is currently in the database, and anything in green is positive. So you can see that there have been lots of buy ratings on stocks like. So is this a factor? Could be. Let's go down to the bottom of the list and see what we have here. Well, you can see most of them are buy side ratings. So and you'll see very few sell ratings. Let's just take a look at the worst sell, 3M Company. Well, I guess it had some effect there, didn't it? This is Paycheck. All right. I don't know how much I would factor those in, but I just put them in there out of curiosity. Now let's do a resort here. Go back up to the top. And sort on raw combo. And here's the percent of institutions that own these stocks. And you can see that most of them, if not all of them, are pretty heavily owned by institutions. So that's a factor. I'll just move on over here. These are some fundamental fields I put in. Gross profit margin seems to be important. Long-term debt to equity, generally the lower the long-term debt to equity, the better. You can see that these stocks are carrying some debt, which is not surprising. Let's do a sort on here. The stocks that are showing no debt go all the way back to the left. And you can see that really wasn't much of a factor in a lot of these. I mean, these are not up that much for the year, so probably not a major consideration. Return on equity. I need to go back and resort this. Well, here I'll just do it here. Just type in raw combo rank, and then it resorts according to the combo rank. You can see NVIDIA's back on top. So the gross profit margin, long-term debt to equity, net profit margin is good. Return on equity and return on equity divided by the PE. I don't know how much those factor in at all, but that's a pretty decent return on equity. So after looking at this and studying it, and I may do more with this in the future, the things that are most important are relative strength and industry movement, which we've known for a long time. And the thing that it really stands out to me is that the EPS rank is a non-factor. So if you're filtering, don't even bother filtering with the EPS rank. Stick to a relative strength rank and group movement, and you'll be much better off. And then, of course, we need to find stocks where the optimum time to buy them is after they've pulled back. Now I want to bring a chart back up, and a chart which is above the 2 chart is an interesting chart to look at. What I did when I created this chart is this is a relative strength of the stock or a stock compared to the S&P 500, and you can see that even though NVIDIA has been going up sharply, it's still outperformed the S&P by a considerable amount. Now, when it got in this flat area, it was not outperforming. But recently, as it's gone up, you can see it's outperforming. And all throughout here, this is going up, but this is the outperformance compared to the S&P 500. Now, this window here, the cyan is the industry group, and green is the strength compared to the industry group. So, cyan is a group. You can see the group's been going up, but here when the group kind of came down, NVIDIA was outperforming the group still. So, we have visuals here of the performance compared to both the S&P and also to the group. So remember, it's right here. You can read it. The green is the strength versus the industry group. Now also in this chart, let me bring this up, and I have the intraday information over here. Here's the RS rank for the Kirkpatrick and the relative strength rank of HDSI. If it's a box stock, that'll show up here. NVIDIA is not, it doesn't qualify as a box stock, evidently, even though the strength has really been strong compared to the S&P and generally to its group. Now let's go back here. I'm going to draw this arrow down here. You can see where NVIDIA was flat when compared to the S&P, but it was underperforming the S&P as it went down here. These are the points we want to be looking for when it starts outperforming its group. Maybe a little bit later here. It's also starting to outperform the S&P at this point, but you can see right here, it's the group is moving up, and it's moving along with the group. It's not outperforming the group. Now I'm going to drop down to, I have to close this. I'm going to drop down to the number 2 chart, and let's look at this area right here. You can see that the 3 went down through the 6. Here, multiple VPA flags, and then as it was starting to come back up, it didn't cross over there, but it did cross over right there. And the 6 was actually below the 18 there also. So it was weak, but all of these VPA flags were telling us that there was some accumulation going on, and earnings were out at that point. Let's take a look at I want to look at Meta. Take a look at this here. This is the industry group. I want to go up one. And you can see that it was outperforming the S&P 500 from, well, right, slightly there, and then it flattened out, and then it started moving up and outperforming the S&P 500 right here. How did it do relative to the group? The green line is the strength versus the industry group, and the group was actually flat to going down while the stock itself was outperforming the group. Let's go back down to number 2. You can see it was chopping around here, but there were some VPA flags in here. Chop above and below the 3 and the 6. At this point right here, I didn't point this out on NVIDIA, but you can see the 3 crossed over the 6, and then there was a pocket pivot. Right here, there was an effort to rise on the same day it crossed over. That's often a really good signal. Let's just go up one chart. We can see this better. So here, right here, was the effort to rise. And then when we put it in context with the number 2, that was right there. And you can see the 3 crossed the 6 on that day. Then we had the big gap up here, settle down again, and then you can see buying coming in here and here and here with the pocket pivots and efforts to rise. So there are a lot of signals, and then when you combine that with a comparison to the group and the relative strength and the overall relative strength, the RS ranks, that's a pretty good indication that a stock is strong. And what you want to do, or what we want to do, is look for opportunities to get in. Now this is an expensive stock, but you can always trade debit spreads on these because they're liquid, and when they're liquid you can get in to the debit spreads and at least have a position on without risking too much money. That's going to be it for this video. I probably won't touch on this on the webinar because it's in this video, but we'll talk about other things at the webinar on Thursday about prospecting. I've got a lot of things I want to talk about. I want to talk about context. I want to talk about structure, market structure. I want to talk about risk, the 3 types of risk: setup risk, intrinsic risk, and contextual risk. And that's what this chart does. It gives us the intrinsic risk and the contextual risk. Setup risk we can also determine by using this tool right here and putting the information into the spreadsheet. For example, back here, and I realize this is small, but this risk would have been 6.42% from under the low of this one and above the effort to rise. Now that's not a huge risk on a stock that looks like it might be taking off, but I'm going to cover all these in the Thursday webinar. Thanks for listening, and I'll see you Thursday if you're online.